That's right. We knew it was coming. The Fed raised the interest rates. But does that mean the housing market's going to crash? Let's take a closer look. Hi, I'm Stacy Olson with the Valentini team at William Raves Real Estate. And on my channel, I'm going to teach you everything you need to know about living on the Connecticut coast. Yeah, interest rates are up. The average 30-year fixed mortgage today is hovering somewhere between 5.75 and 5.9%. And just 30 days ago, it was only like 5.25%. And 6 months ago, at the beginning of 2022, it was only about 3%. So what does this mean? Unfortunately, it's predicted that the Fed's going to raise rates even higher this year. So they'll continue to climb. Does this mean prices are going to plummet? Not so fast. Some home buyers are taking a break right now because they think, well, the rates are going up. Naturally, housing prices will go down. But think again. Out of the last 6 recessions we've had here in the US, 4 out of 6 of them actually saw prices of homes appreciating. So they actually went up during a recession. See, we all think back on 2008. That's when the housing crisis hit and the prices dropped dramatically, almost 20%. But we tend to think of it because it's the most recent recession and we're all most familiar with it. But when we look back, you can see that that's not always the case. Recession doesn't always equal housing crisis. 2008 was its own special thing. And due to lenders basically not even verifying income, creating strange loans, balloon payments, people that really weren't qualified were getting approved for home loans. And that's why when the market tanked, these people couldn't keep up with their payments because they couldn't really afford them to begin with. But today, there are so many more strict regulations because of what happened in 2008 that people that are buying homes today are vetted and qualified. So the days of foreclosure after foreclosure are hopefully behind us for good. And now, today, in June of 2022, most financial institutions that forecast real estate are actually predicting it's going to appreciate even higher this year. And what's funny is that as of last month, they're saying as much as 9% appreciation. And that's actually an increase from what they had predicted at the beginning of the year because they only thought 5%. So obviously, the market that we've had in the last 5 months has shown that the houses are continuing to appreciate at a faster rate. So what's contributing to this? Rates are rising because demand is still very high. It's hard to believe that we've been in this COVID pandemic now for over 2 years, and there's still pent-up demand from people that want to purchase a home. Not everyone has been free to just go out and look at homes or feel comfortable doing that, so there's still a demand. Plus, all of the millennials are getting into that home buying age, and they want their piece of the pie. So with that huge influx of population of people getting to that right age, plus the pent-up demand, there's still low inventory. And people are still hesitant to put their home on the market because of the COVID pandemic. So there's all these factors contributing to why housing prices are so high and will continue to appreciate. So if that's the case, and they're predicting that home prices are going to just keep increasing this year, you're actually better off buying today. Because even though interest rates are up, they're still historically low. People in the early 80s were taking out home loans in the teens. I know that seems so hard to believe, but it's true. And even in the 90s, people were taking out loans in the high single digits. We're nowhere near that right now. And buying a home today saves you from paying that higher price a year from now. So it's always a good idea to look at your finances and see what you can do. Because yes, higher interest rates do change possibly what you're looking at, but it doesn't mean you can't afford to buy at all. So what does a higher interest rate mean for you as a buyer? One good thing is that there should be more inventory to choose from, because as home buyers get scared away from the higher rates, there's going to be more homes on the market because less people are buying them. And that's always good for a buyer. And then that means you could possibly negotiate more too, because if a home is sitting on the market a little longer than they wanted to, they might be willing to reduce that price. And one not so great thing, depending on the type of buyer and financial situation you're in, the higher rate could mean that you could afford less home. Let's look at an example. So let's say at the beginning of 2022, you were looking at a home that was worth $650,000, and you planned on putting 20% down. And that would mean you would be mortgaging a $520,000 loan. And at the rates back then, let's say it was 3.5%. So your monthly principal and interest payment would be $2,335. So let's look at that same $650,000 home today with 20% down and a loan amount of $520,000. Let's say your rate is 5.625%. Now your principal and interest is $2,993. That's right. That's an increase of $660 a month. That's a lot of money, and it might just price you out of the market. But on the flip side, you might just need to lower the home values that you're looking at. So instead of looking at something at $650,000, look at something about 20% less. So maybe in the $520,000 range, $540,000 range. So you just have to manage your expectations with these higher interest rates. You need to always be comfortable with your payment. And some people, if they are very flexible with their financial situation, the higher interest rate doesn't necessarily scare them if they have more cash to put down. But not everybody's in that boat. But think about it. It's better to get that home today at the lower price and the lower rate, because we know, based on what they're forecasting, the home prices are going to go up and the interest rates are going to go up. So a year from now, you might be in an even worse situation. So you should really look at your finances today, get that pre-approval locked in so you know what you can afford, so you can get that home you've always wanted. I know, it stinks. Rates are going up, and they're likely to go up again this year. And inflation's hitting us pretty hard right now. But I can't predict whether or not there's going to be a recession or not. But I do know that buying a home is always a great way to add stability to your life and build your personal wealth. So if you're still interested in buying a home, check out this video where I tell you how to save money for your down payment. And if you liked this video or any of my other videos, hit the subscribe button, and I'll see you next week.